Hi, this is Gaurav from Kuvera, and I'm with Pratik, who heads passives for Motilal Oswal. Pratik, today we want to talk about total market indices, right? What are total market indices, and what are the options available in India for someone who is interested in just buying the whole market?
Yeah, so one of the most interesting funds, for an investor or for a retail investor or someone to go out there and buy, which includes a combination of large cap, mid cap, as well as small caps in one single fund, is a total market fund or total market index. And today you have the Nifty 500 index, which is very popular. It's a fund that offers you, I think top 500 companies in India, that covers roughly about 95-96% of the entire Indian market cap within one fund. So I think that's the advantage of just having, if you are looking for a the one fund that is a good broad-based indicator of how the Indian market is doing. I think Nifty 500 is that particular fund that you can go for. So just to tell you, if you look at, say, one of the world's largest mutual funds, Vanguard, we a lot of people know about Vanguard's S&P 500 fund, but a lot of people don't know that their biggest fund is actually their total market index fund, which is about, I think, a few thousand securities, because people would want to own the entire market, and a total market fund allows you to do that very simple and low cost way.
And so what would be, most people in India are only getting into index investing, and the first indices that we see people buy is either Nifty 50 or Nifty Next 50, right?
Yeah.
Now you're talking about Nifty 500, which is Nifty 50, Nifty Next 50, the mid cap and the small cap index all together in one large, right?
Yeah.
What would be the advantage of something like a Nifty 500 index over, say, a Nifty 50, which at least investors are warming up to now?
Yeah. So Nifty 50 is the most popular index, I would say. If you look at the entire sort of passive universe, I would say about 85-90% of all money is invested in Nifty 50. So it's generally the most popular sort of fund in India. It's fairly liquid and very easy to buy and sell on the exchange as well. But Nifty 50 unfortunately is not a good gauge of the Indian economy. If you look at the Nifty 50, about maybe 40% of your money is going to be invested in the top 10 securities,
right? And
also it does not include your half the large cap space as well as the mid and small cap, which is also a big part of the Indian economy. So I think it's at least to me or to us, it's not a good broad indicator of the Indian market. What we've also seen in the past is there will be times when the economy is doing badly, small caps, mid caps, even large caps are doing badly, but the Nifty 50 is doing really well.
Because of the mega cap.
Because the mega
caps. We saw that in the last 3-4 years. The mega caps did well, Nifty 50 was kind of cruising, but that's not something that is sustainable. That's not true diversification. It can happen over a 4-5 year period, but you can't count on it to happen decade after decade.
Yeah.
So fair points. What would be one of the risks of owning a total market index? What is the liquidity like in, say, the last 100 names?
Yeah,
so that's where it gets tricky, I would believe, right?
Yeah. No, so not really. So if you look at the Nifty 500, the way it's structured, if you look at indexes in general, you tend to have larger companies who get larger weightages. So if you look at the entire sort of Nifty 500 basket, it used to be about fairly about 85% large caps, 10% mid caps, and 5% small caps about 2.5 years ago. Now today, you've seen that the small caps and mid caps have done a lot better, and we also expect that the small mid caps to be slightly better in terms of future performance, vis-a-vis the large companies. So I think by Nifty 500, you're getting the advantage of a slight bigger kicker in terms of returns coming from mid and small caps. What we've also seen is that returns of a Nifty 500 are slightly better because of that small portion allocated to the mid and small caps. In terms of the risks, yes, I think buying 500 securities, it becomes slightly complicated for the AMC, because we have to hold a portfolio of 500 companies, and we have to also deploy lots of money in mid and small cap funds. But in reality, and this is what we've seen in the last 3 years of managing this fund, is that it's not very difficult, because still the amount of money that goes into mid caps are quite liquid, into small caps is quite small. So still I think the small caps will be sub 10% of the index, and which is a very small amount, to be honest, unless this strategy becomes a 50,000 crore, 60,000 crore fund. We don't really see it to be a big problem in terms of managing the fund.
And if it's a 50-60,000 crore fund, then the Indian markets are also much larger.
Exactly, absolutely.
All good points, and I think for someone who doesn't want to put in a lot of work, wants to have that India equity bet, a total market index can be a large part, or could be the only fund in your equity portion of your portfolio.
Yeah.
You know, for an individual investor who just wants to get exposure to the India growth story, he doesn't want to think about large cap, small cap, which fund is going to outperform, doesn't want to, just wants to be there in the India growth story. A total market index fund like a Nifty 500 fund becomes a really great way to play that story. So thanks, Pratik, for talking to us about the total market index.
Thanks, Gaurav.